Qualcomm, one of the world's largest semiconductor design companies, is scheduled to report quarterly financial results after the markets close on Wednesday, November 6, 2024. That has investors asking if they should buy the stock before the company announces earnings. I'll answer that question in this video. I'll also preview what investors can expect from Qualcomm in the upcoming earnings release and what numbers would be considered a good quarter, an excellent quarter, etc. So let's take a look at this interesting company. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So let's start with what the company did in its latest quarter. And this was updated July 31st, 2024 by Qualcomm. You can find this on Qualcomm's investor relations website. Management team saying that their third quarter results reflected strong execution of their growth and diversification strategy, with the QCT segment quarterly revenue and EBT earnings before tax margins at the higher end of their guidance. So the previous quarter went better than expected, right? They gave you a range of what they were expecting, and the results came in on the higher end of that range. They go on to say that they're excited about the launch of their Snapdragon X series solutions for PCs that deliver leading performance, unmatched power efficiency, and personalized AI experiences. So one of the categories that has many investors excited is the enhancement of personal computers with artificial intelligence. So far, these computers are off to a slow start. People are not clamoring to jump over themselves to get these latest AI-enhanced PCs, although market participants do expect adoption to increase as people become aware of the capabilities and as software improves to deliver better enhancements. It's just now getting underway, and I expect an industry forecast suggests that 2025 is going to be a much stronger year for PC sales than 2024. So Qualcomm is entering this market at an opportune time. Now, this will add another segment for the company that could deliver significant growth. Remember, this is primarily a handset business for smartphones. And I'm going to highlight something unique about smartphones in just a moment, so stay tuned for that. So for the third quarter, the company delivered revenue of $9.4 billion, which was up 11%, and earnings before taxes increased by 30% to $2.279 billion. And that demonstrates the asset-light business model this company operates. Remember, I said that they are a semiconductor design company. They outsource their manufacturing to companies like Taiwan Semiconductor and others to manufacture the chips that they design. There was some rumors about Qualcomm acquiring Intel or parts of Intel's business. That was really interesting speculation, but I haven't heard anything more concrete about that. It's interesting to continue following that. Not sure if anything will develop from there, but it is interesting, something to follow. Now, I highlighted I would share something interesting about the smartphone market. Now, I would say about a week ago, on October 17th, to be precise, a little over a week ago, Taiwan Semiconductor held a conference call with investors around the world. And one of the things they noted was that they experienced strong smartphone demand. So strong demand from smartphone companies working with Taiwan Semiconductor. And so they experienced an increase in revenue because there was a lot of smartphone demand coming through. And I don't know if that means that the smartphone segment is going to deliver better growth here in 2025. Usually, smartphone segments are saturated, so you're going to see very low single-digit growth. But maybe you'll get a little bit better growth here in 2025 as these AI enhancements make people a little more interested in upgrading their phones. And also, many people bought phones in 2020 and 2021 because of all of the government stimulus worldwide encouraged people to buy more electronics, and phones were one of the things that were purchased en masse in those couple of years. And so it'll be interesting to see if people start upgrading those phones they bought, 3 and 4 years ago. People upgrade smartphones a lot more quicker. I know smartphones can last much longer, but people have been in the habit of upgrading their phones roughly every 3 to 4 years. So it'll be interesting to see if there's an increase in demand from this segment, where Taiwan Semiconductor suggests that they're starting to notice that early stages of increase in smartphone demand. All right, looking ahead, here's what investors can expect from Qualcomm in the upcoming quarter. They are forecasting revenue in the range of 9.5 to 10.3 billion, which at the midpoint would be $9.9 billion. And if they do deliver the midpoint, that would be a 500 million increase, or roughly 5 or 6% increase from the previous quarter, where they delivered 9.4 billion in revenue. As far as profitability goes, the company is forecasting non-GAAP diluted earnings per share of $2.55 at the midpoint, and that would be an increase of $2.33 from what the company delivered in the previous quarter. For the full year, in the fiscal year 2024, which they are closing out when they report these upcoming earnings results, they are forecasting 13% revenue growth, which is very solid for Qualcomm. Remember, the company's primary business is in smartphones, which is a mostly saturated market growing in the low single digits. So for Qualcomm to grow at this rate is impressive. Now, they are entering new markets that are growing robustly for the company. Most notably, the automotive segment is already growing very nicely for Qualcomm. And given the increased electrification in the automotive industry, that's poised to benefit Qualcomm significantly over the next couple of decades, actually, not just over the next couple of years. On top of that, it's entering into the personal computer market, where it looks to be poised to gain some market share in that industry. Still very early innings in that regard, but the company is innovating impressively, and really interesting for investors to consider this company that was previously thought to have its days of growth behind it. Now, these new segments are generating interest and generating potential for this company to increase revenue growth and profit growth at much faster than historical levels. Now, I've had Qualcomm stock rated as a buy all year long. I last updated that recommendation on August 12th. And investors curious about Qualcomm stock, it's trading at a forward price to earnings of 13.89, which I think is relatively undervalued given the company's acceleration in revenue and profit growth, given the new segments it's entering and the rates of growth accelerating in its mature segments. All things point to solid prospects for Qualcomm. So this is one of those rare situations where I will say that, if you're interested in buying Qualcomm stock, it is a good buy before earnings. I think there's more upside than downside to Qualcomm stock heading into the earnings release. And so this is one investment where I will say that, yes, it is a buy going into earnings. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.